Welcome back to the Deep Dive. It is Tuesday, January 27th, 2026. And we are just settling in after what I can only describe as a whirlwind month in the tech world.
It's been a lot.
A whole lot. We had the absolute spectacle of CES in Vegas. We've just spent the last, 24 hours digesting the Q4 2025 earnings call from yesterday. And honestly, the dust is finally starting to settle. And if you've been following the automotive tech space, or really the AI space in general, you know that everyone's talking about one company right now.
Mobileye.
Exactly. Mobileye. And usually when we talk about Mobileye, we're talking about, safety sensors, right? The little chip behind your rearview mirror that beeps if you drift out of your lane.
The Intel spinoff, the boring, reliable car supplier.
Right. But something massive shifted this month. We aren't just looking at a car supplier anymore. According to their CEO, Amnon Shashua, we are witnessing the birth of Mobileye 3.0.
It is a pivot, a significant one. I mean, they're effectively rebranding the entire mission of the company from, let's say, we make cars drive themselves to we are a physical AI powerhouse.
Physical AI. Okay, that sounds like a buzzword we need to unpack immediately because it feels like every company in 2026 is just slapping AI on their slide deck to get a stock bump.
It does, and you're right to be skeptical. But in this case, it's actually a very specific technical definition. Physical AI is artificial intelligence that doesn't just, generate text or images on a screen like the chatbots we've all been using for years, but AI that interacts with the messy, unpredictable physical world.
So it's AI that can, trip on a curb.
Exactly.
Yeah.
It understands context, it navigates 3D space, and it manipulates objects. And Mobileye is betting the farm, literally almost $1 billion, that the brain they built for the car is the exact same brain needed for a humanoid robot.
Which brings us to the elephant in the room, or perhaps the robot in the room. We are looking at a company that is currently in what they themselves are calling a transition year here in 2026, facing flat revenue growth, and yet they just dropped $900 million to buy a robot startup called Mentee Robotics.
It's a bold move, a very bold move. And to understand it, we have to look at the whole picture. Our mission for this deep dive is to act as an investigative report. We need to look at the financials from yesterday, the strategic sandwich they keep talking about, and this wild robotic future.
And what are we working with? What are the sources?
We're pulling from the Q4 2025 earnings transcript, the CES keynote from a few weeks ago, and a stack of analyst reports from Morgan Stanley, RBC, and Seeking Alpha that just came out this morning.
Okay, a full dossier. So let's start with the here and now. The earnings call happened yesterday. Mobileye released their full year 2025 scorecard. Before we get to the robots in the future, we have to look at the bank account. Give us the headlines. How did they do in 2025?
Well, if you look in the rearview mirror at 2025, the company is actually quite healthy fundamentally. Revenue landed at $1.9 billion, which is up 15% year over year.
15%. That's pretty solid in this environment.
It's very solid. They shipped about 35.6 million chips. Their adjusted operating income was $220 million, which is up a huge 45%. But the number that really matters here, the one the institutional investors are circling in red ink, is the operating cash flow.
Okay.
In 2025, they generated nearly $500 million in cash.
Okay, let's pause there because I saw some headlines about gap losses due to R&D spending. I think this confuses a lot of people. How can a company lose money on paper but print cash at the same time?
This is a classic tech accounting nuance, and it's so important to understand. On a GAAP basis, that's the standard accounting rules, they show a loss. Why? Because they are spending heavily on research and development for things like Chauffeur and the new chips, and they have significant non-cash expenses.
Like stock-based compensation.
Exactly. Stock-based comp. Amortization of intangibles from past acquisitions. These are expenses on the books, but no actual money leaves the building. Operating cash flow is the truth serum. It asks a simple question. Did more actual dollars come into the bank account than went out? And for Mobileye, the answer is yes. Nearly $500 million more.
So they aren't burning furniture to keep the lights on.
Far from it. This is the key to their whole strategy. They have zero debt and $1.7 billion in liquidity. It's what one of the analyst reports called a cash fortress.
A cash fortress, I like that.
It's a great term for it. And this is crucial because when you're trying to pivot a massive company and invest in something as speculative as humanoid robots, you need a war chest. You need to be able to weather a storm without begging banks for loans or diluting shareholders.
Which implies they can weather a storm. And that's good, because looking at the guidance for 2026, it looks like there might be a bit of a storm, or at least a lull, coming. The stock market did not love the outlook.
No, it did not. They are calling it an air pocket. The guidance for 2026 revenue is essentially flat to maybe 5% growth. We're talking $1.9 billion to roughly $1.98 billion. And for a high-growth tech company that just posted 15% growth, flat usually freaks investors out. It looks like stagnation.
So why the stall? If 2025 was up 15%, why is 2026 hitting the brakes? Is demand for their chips drying up? Are car companies buying less?
It's not a demand issue from the consumers or the car makers. It's a complexity in the supply chain. There are three main culprits here, but the biggest one is something called inventory correction.
Which sounds like corporate speak for we made too much stuff.
It's actually the opposite. To understand this, you have to understand the bullwhip effect. It's a classic supply chain nightmare that business school students study.
Okay, walk me through the bullwhip.
Imagine you are holding a long whip. You flick your wrist just a tiny bit at the handle. That's the end consumer buying cars. Maybe car sales slowed down just 1% or 2% in late 2025. A tiny movement, but that wave travels down the whip. The car makers, the OEMs like VW or Ford, they get nervous. They don't want to be stuck with parts, so they overreact and cut their orders to their suppliers by maybe 10%.
They amplify the signal.
Exactly. And then the tier one suppliers, the companies like Bosch or Magna who actually build the camera boxes and integrate the chips, they look at their warehouses and they panic even more. They say, stop the shipments completely. We aren't buying a single chip from Mobileye until we clear this shelf.
So Mobileye, sitting at the very end of the whip, sees this tiny flick of the wrist as a massive jolt. They go from full production to zero orders effectively overnight.
Precisely. On the earnings call, they said the tier ones let their inventory of Mobileye chips drain to extremely low levels in late 2025. They just emptied the shelves completely.
So they sold what they had in cars but didn't buy any new ones from Mobileye to replace them.
Correct. So now we enter 2026. The shelves are bare. The whip is snapping back. Q1 2026, this current quarter, is going to see a massive spike. Mobileye is shipping about 10 million IQ units just to refill those empty shelves. It's going to look like a boom.
But it's a fake boom. It's just refilling the pipeline.
It's an artificial boom because then for the rest of the year, it drops back down to a normalized rate of about 9 million per quarter.
So the year looks incredibly lumpy. The year-over-year comparisons for Q2 and Q3 are going to look awful.
Terrible. Even if the actual number of cars hitting the road with Mobileye chips is stable or even growing slightly, the shipment numbers that Wall Street tracks are going to be all over the place.
Okay, so that's the logistics hiccup. What else is causing this air pocket? You said there were three things.
The second is China. The Chinese market is just incredibly volatile right now. Mobileye is being very cautious and predicting a decline of about 500,000 units in China for 2026.
500,000 units is a lot. Is that because of competition? I know the Chinese domestic EV makers are moving incredibly fast.
It's partly competition, yes. You have fierce local players like Zeekr who are trying to build their own tech stacks because they want to own the data and the software experience. But it's also just what they called short-term order visibility.
Meaning they just don't know what's coming next week.
Pretty much.
Yeah.
The Chinese market turns on a dime. One month the car model is hot, the next month it's dead. Automakers will place a huge order and then cancel it a month later. So Mobileye is choosing to be conservative rather than promise growth in China they can't guarantee.
It's smart, but it's painful for the growth narrative. Okay, and the third factor.
The third factor is the transition itself. This is the bridge year concept they kept talking about. They are bridging the gap between the old legacy chips, the IQ5 and its variants, and the new high-margin systems that really start ramping up in 2027.
The IQ6.
The IQ6. And the systems built around it, like Chauffeur and Supervision, they're sort of stuck in the middle right now. The old stuff is fading as a percentage of revenue, and the new, more profitable stuff hasn't fully kicked in yet.
So 2026 is the year they have to just grit their teeth and get through. It is a hold the line year while they retool for the next phase.
Exactly. It is all about execution this year. They have to prove they can deliver the new tech on time and on budget so that 2027 becomes the inflection point they are promising to investors.
Right. So let's talk about that new tech and the strategy behind it. Because if you just look at the flat revenue, you miss the forest for the trees. Amnon Shashua has this metaphor he's been using to explain how they're going to win the market. He calls it the sandwich.
The sandwich. It's a great visual, and honestly, it is the best way to understand their business model right now. It's not just about one product, it's a pincer movement.
So if I understand this correctly, Mobileye is the meat in the middle, and they are trying to squeeze the market from both the top and the bottom at the same time.
That is the idea. They are attacking two totally different segments of the car market simultaneously to squeeze out competitors and also to create a ladder for their customers, the OEMs, to climb.
Okay, let's break that down. Let's start with the bottom bun. This is the mass market, right? The everyday cars, the Toyota Corollas, the VW Golfs, the Ford Escapes of the world.
Correct. This is what they call surround ADS. Historically, basic safety in a car automatic emergency braking lane keeping was done with one single camera on the windshield. Mobileye owns that market. They have a huge market share. But now they want to move those mass market cars to a multi-camera system.
Like what you see on a Tesla, cameras all around the car.
A similar concept, but engineered for the masses. We're talking about a system with roughly 11 sensors, maybe 7 cameras, 5 radars. It's not the full-on self-driving suite, but it gives you a 360-degree view around the car for much better parking assist, blind spot detection, and more robust lane centering. And they're powering it with a new chip called the IQ6 High.
But wait a minute. Why would a budget car maker, say Ford or VW, selling a standard sedan, want to put 11 sensors on a car? That just sounds expensive. Usually in the mass market, every single penny counts.
And this is where it gets really interesting. It's counterintuitive, but it's actually cheaper for the automaker to do it this way.
How is adding more cameras and a fancier, more powerful chip cheaper? That defies logic.
It comes down to a really important concept called ECU consolidation. Think about the architecture of a modern car. It is a distributed, complicated mess. You have a little computer and electronic control unit, or ECU, for the parking sensors.
Okay.
You have a separate ECU for the lane assist camera. You have another ECU for the driver monitoring camera inside the cabin that makes sure you're paying attention. You have another one just to drive the visualizations on the dashboard.
So you have 4 or 5 different little black boxes, probably from 4 or 5 different suppliers, with different software, different wiring harnesses running all over the car.
A total nightmare. It's inefficient. And copper wiring is heavy and expensive. The assembly labor to plug all those boxes in is expensive. Mobileye is going to these automakers and saying, hey, take our IQ6 High chip. It is powerful enough to run all of that. You delete 4 other computers. You use just ours.
So they're consolidating the brain, one chip to rule them all.
Exactly. And the math is incredibly compelling. Mobileye claims this new architecture saves the automaker up to $1 billion in costs over the life of a program.
$1 billion. With a B.
That is the number they are touting in their investor presentations. It allows the automaker to strip out costs from the vehicle structure, from the supply chain management, from the software integration.
Okay, so if I'm an engineer or a finance chief at an automaker, I'm definitely listening. $1 billion is real money. And what does Mobileye get out of it?
They get a massive price hike for their product. Instead of selling a, say, $50 chip for basic safety, they are now selling a full system where their average selling price, the AFP, is 12 to 14 times higher if they are acting as the full Tier 1 system supplier.
Wow.
Or even if they're just the Tier 2 chip supplier, the ASP is still 2 to 4 times higher.
That is a massive revenue jump per car. Even if they sell the same number of chips to the market, their revenue just multiplies.
It is the difference between selling a tire and selling the entire suspension and wheel assembly. And this isn't just a theory. They have confirmed huge wins. They announced a massive deal with Volkswagen and another one with a major U.S. automaker, which the analysts are 99% sure is Ford based on the context clues.
And what's the volume on those deals?
The pipeline for this surround ADAS is 19 million units projected.
19 million cars. That is a lot of sandwiches.
It is a lot of volume, and that's the foundation. That's the cash cow that funds everything else in the company.
Okay, so that's the bottom bun. High volume. Replacing old tech with new, consolidated tech that saves the automakers money. Now let's talk about the top bun, the fancy stuff. Supervision, Chauffeur, Robotaxis.
This is where the physical AI revolution really happens. This is the premium segment, the technologist showcase.
Break down the products for me again, because the names get confusing. What is Supervision versus Chauffeur?
Okay, so Supervision is their eyes-on, hands-off system. Think of it like a very, very advanced cruise control. The car drives itself on the highway, it changes lanes for you, it navigates traffic, it handles on-ramps and off-ramps. But, and this is the key, you have to watch the road. There's a camera watching you, and if you look away for too long, it yells at you. If the car gets confused, you have to take over instantly.
So this is like GM's Super Cruise, or what Tesla's been doing with autopilot.
Yes, exactly. It's a level 2 plus a POSIT system in the official jargon. They've sold about 300,000 units of this so far, mostly with the Zeekr brand in China. It's a great product, it gets rave reviews, but it's still fundamentally an assistance feature.
And Chauffeur.
Chauffeur is the holy grail. Chauffeur is eyes off. This is level 3 or even level 4 autonomy in certain domains. You are on the highway, you push the button, and the car says, I have control. You can legally open a book, check your email, watch a movie on the dashboard screen.
That is buying back your time. That is a completely different value proposition. That's not assistance. That's a service.
It is. It's the ultimate luxury feature. But, and this is a big but for the 2026 stock price, this is where another part of that air pocket comes from. The big flagship programs for Chauffeur are with Porsche and Audi.
The Volkswagen Group again, they are all in.
Yes. The programs were supposed to have their start of production, their SOP, late this year or very early next year. But they have been officially pushed to Q1 2027.
Ouch. Why the delay? Is the technology not working? Is it not safe?
Mobileye was very clear on the earnings call. They say the tech is ready. They claim the delay is due to vehicle platform schedules at the automakers. Essentially, the cars themselves aren't ready for the tech.
What does that mean?
It could be anything. Maybe the software integration on the VW side is lagging or the physical car production line is delayed. These are incredibly complex vehicles. But regardless of whose fault it is, the result is the same. That high-margin Chauffeur revenue isn't hitting the books in 2026.
Hence the flat guidance.
Hence the flat guidance. They are bridging the gap until those Porsche and Audi cars roll off the line in early 2027 with Chauffeur installed.
So we have the sandwich. The bottom bun is the volume ADS business. The top bun is the premium autonomy business. And right now, we're just waiting for the order to be served. I want to pivot to the technology itself, because you mentioned earlier that Mobileye does this differently than everyone else. We hear a lot about end-to-end AI right now, especially from Tesla. The idea that you just feed raw video into a giant neural network and it learns to drive like a black box. Mobileye isn't doing that, are they?
No, and they are quite vocal about why they think the black box approach is dangerous and unscalable. Mobileye uses a bifurcated architecture they call fast and slow.
Fast and slow, like the Daniel Kahneman book, Thinking Fast and Slow.
Exactly like that. It's a direct analogy to human cognition. Think about how you drive a car.
Mostly on autopilot, honestly. Muscle memory. Not really thinking about the micro movements of the steering wheel.
Right. That is your fast system. In Mobileye's architecture, this operates at roughly 10 hertz 10 times a second. It handles the reflexes. Don't hit that car. Stay in the lane. Calculate a safe path forward. It's all about immediate, reactive, provably safe trajectory generation. It prevents you from crashing.
Okay, so it's the lizard brain in the car and the slow system.
The slow system is the prefrontal cortex. It operates at a much lower frequency, roughly 0.5 hertz, maybe once every 2 seconds. This is your higher level reasoning. This uses what they call vision language semantic action models, VLSA.
That is a mouthful. Give me a real-world example of what that means.
Imagine you are driving and you approach an intersection. The light is green. But there's a police officer standing in the middle of the intersection, and he is holding his hand up in a stop gesture.
Right. My reflexes, my fast brain, don't know what to do with that. A green light means go, but the cop means stop. There's a conflict.
Exactly. A pure, fast reflex system might see the green light and the clear path and try to go. The slow system, the VLSA model, looks at the whole scene. It identifies the object as a police officer. It understands the semantics of the hand gesture. It contextualizes that a police officer's command legally overrides a traffic light, and it sends a command to the fast system. Stop. Do not move despite the green light.
So it's like having a driving instructor sitting next to the reflex system. The instructor looks around at the big picture and says, hey, that construction sign implies the lane is going to end in 500 feet. You should probably merge now. Don't wait until the last second.
Precisely. And this split architecture is brilliant for 2 reasons. One, it's safer because you have redundancy and explainability. You can audit why the car made a decision. But 2, it's cheaper computationally.
How is it cheaper?
Because you don't need a massive supercomputer running at maximum power to do that deep semantic reasoning 100 times a second. You only need to do it occasionally when the scene is complex. This allows Mobileye to offload the slow thinking to the cloud sometimes, or just run it on a much smaller, more efficient portion of the chip.
And this brings us to the hardware war. NVIDIA is the giant here. Everyone talks about the NVIDIA Orin chips. They are the gold standard for high compute AI in data centers and in cars. How does Mobileye's IQ6 actually compare?
This is where the engineering philosophy really diverges. NVIDIA builds general-purpose GPUs. They are incredibly powerful, but they are also power-hungry and produce a lot of heat. Mobileye builds application-specific integrated circuits ASICs. The IQ6 is built for one job and one job only, to drive cars efficiently.
It's a specialist versus a generalist.
Right. And because of that intense focus, Mobileye claims that their IQ6 High performs similar workloads to the NVIDIA Orin X, but at, get this, 25% of the cost.
Wow. 1/4 of the price for similar performance.
In some specific metrics they cite in their presentations, it's even better, like 15th to 110th the power consumption. But the cost isn't just the price of the silicon. The real magic is the cooling.
The cooling. This sounds like a boring spec sheet detail.
It sounds boring, but if you are a mechanical engineer at Ford trying to build 1 million F-150s, this is the only thing you care about.
Why?
The IQ6 is passively cooled. The NVIDIA Orin X usually requires active liquid cooling.
So like a radiator for the computer chip.
Exactly. That means you need pumps. You need coolant lines running through the dashboard. You need seals and gaskets that have to survive -40 degrees in an Alaskan winter and 120 degrees in an Arizona summer. And they have to survive a decade of vibrations, potholes, and speed bumps.
And every one of those hoses is a potential leak. Every pump is a potential failure point. If that cooling loop fails, the car's brain fries and the car stops working.
That's right. Whereas the Mobileye solution,
It's just a block of aluminum.
it's a block of aluminum with fins. It just sits there. It dissipates heat into the air. It cannot break. It cannot leak. It costs basically nothing to install and maintain. When Mobileye says efficiency, they don't just mean electricity. They mean engineering headaches removed. For an automaker, that is worth its weight in gold.
That makes a ton of sense. But hardware can be a commodity eventually. What about the data? Everyone says data is the new oil. Tesla has millions of cars collecting video data. What does Mobileye have to compete with that?
Mobileye has REM-road experience management, and this is arguably their biggest, most defensible moat. They have 230 million vehicles on the road with their chips inside. But more importantly, 8 million of those vehicles are actively harvesting HD map data right now as we speak.
8 million little cartographers.
Driving every highway, every back road, every single alleyway, they are mapping the world in high definition, constantly updating it. And this data isn't just for navigation like Google Maps. It feeds their simulator, which they call ACI, Artificial Community Intelligence.
ACI. That sounds very sci-fi.
It acts like it. Because they have the entire world mapped with real driver behavior, they can run millions of simulations overnight. They claim they train their AI on 1 billion hours of driving in a single night.
1 billion hours overnight. That's an astronomical number.
That's the scale we are talking about. So when people ask how they compete with Tesla's real-world video data, Mobileye's answer is, we have the ground truth map of the real world, and we can simulate every possible driving scenario on it faster than real time. It's a different approach to solving the same problem.
Okay, so they have the efficient chips, they have the deep data moat with the map, they have the simulation engine, they are a car tech giant. Which brings us to the twist, the plot twist of 2026, the acquisition of Mentee Robotics.
The $900 million bet on Mobileye 3.0.
Okay, hang on. We really need to stop and dig in here, because if I'm a shareholder, I'm looking at this and screaming, Mobileye is a car chip company. Investors are already worried about flat revenue in 2026. Why on earth go out and spend nearly $1 billion to buy a humanoid robot startup? It seems completely out of left field.
Amnon Shashua's answer is simple: synergy. He argues, quite forcefully, that a humanoid robot is just an autonomous car with a different form factor.
A car with legs.
Think about it. What does a robot need to do to function in a human environment? It needs to see the world in 3D, computer vision. It needs to understand where it is in a room, localization. It needs to navigate a path from the kitchen to the living room without hitting the coffee table, path planning. And it needs to understand context, like pick up the red ball, not the blue one, that VLSA slow thinking we talked about.
It's the exact same software stack they built for the car.
It's nearly identical. Mobileye has spent 20 years and billions of dollars perfecting the ability for a machine to see and understand the physical world from a driver's perspective. Now they're just changing the perspective to a person's height. Mentee Robotics provides the body.
And what a body it is. I saw the specs from the CES keynote. This isn't like the old hydraulic robot.
No hydraulics at all. It's all electric actuators. And here is the kicker. Mentee owns the whole stack. They build their own custom actuators, their own robotic hands, their own sensors. Because of this vertical integration, and crucially because they can use Mobileye's cheap, power-efficient, automotive-grade chips as the brain, they are targeting a production cost of $20,000 per robot.
$20,000. That is cheaper than a Honda Civic.
That is the entire point. If a robot costs $250,000 like the early Boston Dynamics models or the first Tesla Optimus prototypes, it is a research novelty. It's a toy for a lab. If it costs $20,000, it is a worker. It becomes economically viable for warehouses, for factories, and eventually for homes.
And unlike some of the other demos we've seen, and I'm looking at you, Tesla Mobileye went out of their way to emphasize that Mentee is not teleoperated.
That was a very pointed dig during the keynote. Amnon made it crystal clear many robot demos you see today are actually a human wearing a VR headset in another room, controlling the robot remotely like a puppet.
The Wizard of Oz behind the curtain.
Exactly. Mentee claims their robots are running end-to-end AI. They use a process called sim-to-real, simulation to reality transfer. They watch a human do a task once, and then the AI can generalize and do it itself.
So what's the timeline here? When do I get my robot that can fold my laundry and make me a sandwich?
Don't fire your housekeeper just yet. The timeline is aggressive, but phased. 2026 this year is the proof of concept phase. They'll be doing industrial pilots in structured environments like warehouses. We're talking tens of units.
Okay, very small scale.
Then 2028 is the target for series production for commercial use warehouses, logistics centers, maybe light manufacturing.
And the home.
2030 is the target for unstructured environments. And that means your house. A house is the most chaotic place you can imagine. Toys on the floor, pets running around, poor lighting. That is the hardest challenge in all of robotics.
But 2030 isn't that far away. That's 4 years from now.
It's incredibly fast if they can hit it. It's an audacious goal.
Now, we have to address the governance elephant in the room regarding this deal. Because I want to be skeptical for a second. Mentee Robotics. It wasn't just some random startup Mobileye found, was it?
No, not at all. It was co-founded by Amnon Shashua, the CEO of Mobileye. He was the chairman of Mentee. His son works there as a lead engineer.
That sounds messy.
Yeah.
That is the textbook definition of a related party transaction.
It is, and the analysts on the earnings call grilled them on it. They knew this question was coming.
I bet they did. Because if I'm a cynic, I look at this and I say, the CEO takes $900 million of company cash, shareholder cash, and uses it to buy a private startup that he founded and his family works at. It sounds like a bailout.
It's something.
It sounds like, hey, my robot hobby project needs an exit. Let me just have my big public company buy it.
Yeah.
How did they justify this without a massive shareholder revolt?
That is the billion-dollar question. They knew how this would look, so they built a fortress of bureaucracy around the decision. Amnon Shashua recused himself from every vote and every discussion about the acquisition. The board formed an independent committee of directors who had no ties to Mentee.
Okay.
That committee hired its own external auditors and financial advisors to value Mentee independently to ensure the price was fair. And finally, Intel, which owns the majority of Mobileye, had to approve the deal.
So the paperwork is squeaky clean.
The paperwork is pristine. But at the end of the day, you're betting on Shashua's vision and integrity. You have to believe he genuinely thinks this is the future of the company and the best use of capital, not just a convenient payday for his other venture.
It's the founder premium or the founder tax, depending on how you view it. His argument is that Mobileye was the only logical buyer on the planet because the tech stacks are so deeply intertwined.
Right. And that is the core of the Mobileye 3.0 thesis. Mobileye 1.0 was basic ADAS safety. Mobileye 2.0 was autonomous driving. Mobileye 3.0 is physical AI unified brain for both cars and robots.
Let's move on to the partners who are actually going to put this Mobileye 3.0 tech onto the road. We talked about VW earlier. They seem to be more than just a customer. They seem to be the anchor tenant for this whole vision.
They are absolutely critical. The Volkswagen Group relationship covers every single layer of that sandwich strategy. They are buying these surround ADS for the mass market Golfs and Jettas. They are the launch partner for the premium Chauffeur systems in the Porsches and Audis. And they are the exclusive vehicle partner for the Robotaxi.
The ID Buzz.
Yeah.
The electric microbus.
Yes, the retrofuturistic van. The Robotaxi service is a VW subsidiary called MOIA.
MOIA. And what's the status there? This isn't just a science project, right?
No, it is moving very fast. They stated on the call that the vehicle will be level 4 ready, meaning technologically capable of driving itself without a human by February 2026.
That's next month.
Next month. And the plan is to go fully driverless, pulling the human safety driver out of the front seat in a geofenced area in the U.S. by Q4 of this year, 2026.
That is incredibly aggressive. I mean, Waymo has taken a decade to scale to a few cities. VW and Mobileye want to go from zero to driverless in the U.S. in less than a year.
And they are talking about real scale. The roadmap shows 100,000 of these robotaxis on the road by 2033.
And this ties into their mobility as a service partnerships. I saw they mentioned Uber and Lyft.
Right, and this is a smart move. Mobileye isn't trying to build a consumer ride-hailing app to compete with Uber. They know that's not their expertise. They want to supply the Uber and Lyft fleets.
So the model is what?
The model is Mobileye supplies the drive system, which is basically 4 IQ6 high chips and all the software. Volkswagen supplies the ID. Buzzvan, Uber or Lyft supply the riders through their existing apps.
Everyone stays in their lane, so to speak.
Exactly. And the economics are really attractive for Mobileye. They likely get a per mile or per trip fee. So every time that robotaxi drives a passenger, Mobileye gets paid. It's recurring, high-margin revenue.
That is the subscription model dream for a hardware company. But let's talk about the user experience for a second. They used a specific term that caught my ear, mind off. We know hands off, which is level 2, and eyes off, which is level 3. What is mind off?
Mind off is level 4. It means you are no longer the driver. You are a passenger. You can go to sleep. You can play video games. You can turn your seat around and talk to people in the back. You are not required to monitor the road or be ready to take over.
I want to drill down on mind off for a second because I don't think people realize how radical that legal and psychological shift is.
It is the difference between a tool and a servant.
Right. If I'm in a level 2 or a level 3 car today and it crashes, it is my fault. I am the captain of the ship. The car is just assisting me.
Correct. You are the legal driver. The AI is just a fancy power steering assist in the eyes of the law, even if it's doing all the work.
But in a mind-off level 4 system.
In mind off, you are cargo. If that ID Buzz Robotaxi hits a pedestrian, the police don't interview you. You are a witness. They interview Volkswagen. They interview Mobileye. The liability shifts from the person in the car to the corporation that built the brain.
That terrifies the legal departments of every car company on the planet.
It paralyzes them. And that is why that fast and slow redundant architecture we talked about isn't just a cool tech feature, it is a legal shield. They have to be able to go into a court of law and prove, mathematically, that the system did everything physically possible to avoid that crash. The slow brain has to show it understood the complex context, and the fast brain has to show it reacted instantly and safely.
All right, we've painted a pretty rosy, futuristic picture of the technology and the strategy, but we are an investigative team here. We need to look at the bear case. Why might this whole grand vision go wrong? What keeps Amnon Shashua up at night?
Well, the biggest, darkest cloud hanging over the stock price right now isn't even about Mobileye's performance. It's about Intel.
The parent company.
The parent company. Intel still owns about 88% of Mobileye. And as we all know, Intel has been in, let's say, financial distress. They are cash poor. They are trying to fund a multi-billion-dollar turnaround of their own foundries to compete with TSMC.
And Mobileye is their most valuable, most liquid asset on the balance sheet.
Exactly. So there is a constant fear, and overhang is the term Wall Street uses, that Intel will decide to dump a huge chunk of Mobileye stock onto the open market to raise cash for themselves.
So even if Mobileye is executing perfectly and winning deals, the fear that their biggest shareholder might sell at any moment keeps a lid on the stock price.
It absolutely suppresses the price. Buyers are hesitant. Why buy today if Intel might flood the market with shares tomorrow? Okay, so that's risk number 1. Number 2 is the China pressure.
We mentioned the 0.5 million unit decline this year, but the long-term risk is bigger, isn't it?
Much bigger. The long-term risk is, can Mobileye hold on to the Chinese market at all? This isn't just about competition. It's about geopolitics and national pride. The big Chinese EV companies like Zeekr, BYD, NIO, they want to own their own technology stack. They don't want to be reliant on an Israeli-American company for the brains of their cars.
And Zeekr has already started swapping Mobileye out for their own in-house tech in some of their newer models.
They have. It's a real threat. If that trend accelerates and Mobileye goes from a market leader to a niche player in the world's biggest car market, that fundamentally alters their growth story.
That is a serious threat. Okay, what else? What about execution risk?
The delay of the Porsche Audi program is the perfect example. It's a warning sign. Building this complex software is hard. Integrating it into a car is even harder. Delays happen. If the Chauffeur launch in Q1 2027 becomes Q4 2027, which then becomes 2028, that bridge year suddenly becomes a bridge to nowhere. Investors do not like waiting.
The robot. Can they actually build a useful working robot for $20,000?
Yeah. That's maybe the biggest execution risk of all. It's never been done before.
And finally, the giants. NVIDIA and Qualcomm.
You can't ignore them. NVIDIA is the 800-pound gorilla in the AI space. They control the AI training infrastructure of the world. Every researcher, every university, every startup uses NVIDIA GPUs. There is a massive gravity to their software ecosystem, CUDA.
So even if Mobileye's chip is cheaper and more power efficient for driving, developers might just prefer to use the NVIDIA tools they already know?
It's the path of least resistance. Mobileye has to fight against that cool factor and the sheer size of the developer community that NVIDIA has built. It's the classic Apple versus Android or Windows versus Mac fight all over again, but for the soul of the car.
So we have the financials, the sandwich strategy, the fast and slow tech, the robot pivot, and a whole list of serious risks. Let's bring it all together for a final verdict. If you are an investor looking at Mobileye in January 2026, what are you seeing?
You're seeing a classic fallen angel value play. The stock has been beaten down. It's trading at roughly 4 times sales. For a technology company with these kinds of software-like margins and a near monopoly in its core niche, that is dirt cheap.
It's being priced for failure, or at least for permanent stagnation.
It is priced for the 2026 flat growth to continue forever. The market is looking at the air pocket and saying, man, this is a boring old car supplier. But the entire investment thesis, the bull case, is all about the 2027 inflection.
The convergence of all these different product lines.
Exactly. If you believe the sandwich strategy works, then 2027 is the year it all comes together. The high-volume, high-margin IQ6 high ramps up. The low-margin IQ5 fades out. The ultra-high-margin Chauffeur launches with Porsche and Audi. And the first Robotaxis start generating recurring revenue on the streets.
So the argument is you're buying the company during its awkward, painful bridge year, right before the growth engine kicks back into high gear.
That's the thesis. The argument is that Mobileye is a cash-generating utility, the basic ADAS business that is funding a high-reward robotics bet. The downside is protected by their cash fortress and market position. As one of the analysts put it in their report this morning, risk-defined, portfolio protected.
It is definitely not a boring car chip company anymore.
Far from it. This is one of the most interesting stories in tech right now.
Before we sign off, I want to leave our listeners with one final provocative thought. We've talked a lot today about cars and robots as separate products, but Amnon Shashua said something in his CES keynote that has really stuck with me.
About the global labor shortage.
Yes. He believes that in 10 years, we will need millions of humanoid robots because there simply won't be enough humans of working age to do all the necessary jobs. But the profound realization is this. If Mobileye is right, the car in your driveway and the robot folding your laundry will share the exact same brain.
They'll learn from each other.
Right. Your car will learn how to navigate a chaotic construction zone because your household robot learned how to navigate a cluttered living room with toys on the floor.
It's a shared intelligence, a universal physical AI. It's not about specific devices. It's about creating a single, unified AI that understands how to operate in the messy physical world, regardless of the body it's in.
The question we've been asking for a decade isn't just can they drive anymore. The new question is can they live with us? And if Mobileye pulls this off, they won't just be the Intel of cars. They'll be the Intel of everything that moves.
A fascinating thought. And we'll be watching those Q1 shipment numbers very, very closely. That is the first real test of whether this bridge year is on track.
Indeed. We will keep you posted. Thanks for listening to this deep dive into Mobileye 3.0. Drive safe or, well, let the car do it for you. We'll see you next time.